turn our focus, though, to the European debt crisis. Our next guest says financial markets will continue to be volatile until Europe decides where it is heading. Dino Kos is managing director of Hamiltonian Associates and a former executive vice president here at the New York Fed. Dino, let me ask you about Angela Merkel and Nicolas Sarkozy. We just had a trader in here who said he believes them, that they're going to deal with this issue in the 2 or 3 weeks that they asked for here. Do you think investors really have that much faith in Merkel and Sarkozy?
Well, they've said, and other people have said this, they have come out to announce that they will have a plan to come up with a plan. And so right now we don't have details on what they will do. We don't know how they will deal with the banks, and there's banks both in the core countries and in the weaker peripheral countries. We don't know how they're going to deal with the debt in some of these countries like Greece and some of these other countries. So there's a lot of unknowns. The market has rallied, and so doesn't
the market rally on the idea that they have basically pledged to backstop the banks?
But until we see the details, remember, the Europeans have solved this problem about 3-4 times now since May of 2010. We've had 2 or 3 Greek packages or realignments. We've had a package for Portugal. We've had a package for Ireland. And now lurking in the background is some of the bigger countries. So we have been promised several times that the problem has been solved, and yet here we are yet again asking, well, how will they deal with the problem? And ultimately, the issue is the only way to solve this thing is one of 2 ways. Either some of these countries have to leave, or you have to have a full transfer union where, in effect, the richer countries are sending money every year to the poorer countries, and that's a big political issue. And we just haven't had that discussion happen in Europe yet.
Why can't they just default and stay in the euro? Why can't Greece, for example, just default and stay in the Eurozone?
People talk about that, but let's think this through. So they default. They have all of the bad things that go along with the default. You don't have access to markets. You probably have corporate banking defaults and the like. And then what? You don't have control over your currency, so you can't devalue. You can't print money. There's all these things that you can't do.
Could they step out? Could they step out for a little while and come back later? Some people have suggested that.
Yeah, but I don't know how you do that without then going through the whole convergence process again, without going through the applications process again. It's not like there's like a second league. You get relegated to the second league and then you can come back in. Basically you exit, and then you would have to go through the application process and to come back in. It's not an easy thing to do.
So what are you telling clients at Hamiltonian? Here we're rallying on basically faith in Merkel and Sarkozy the same way we did on Monday, and you're saying it's still a serious problem and it's still going to drag on for a while. You've seen how volatile these markets are. At the whim of a European headline, they turn around.
We had yesterday the situation where, people on this floor who probably couldn't find Slovakia on a map in most cases, who were pivoted and riveted to, this notion of what will the Slovakian parliament do? This is where we are in terms of the sentiment can be moved by all kinds of things that in the past just would not have been the case. But this sort of tells you also how complicated it is. You have 17 governments, 17 parliaments need to act. Any one of them could veto this thing. There's a lot of risks. And so whatever Merkel and Sarkozy come up with, A, will it be credible? B, can they sell it to all the other to all the other countries? C, will it be enacted? Will it be approved? On what timetable? What are the pitfalls? There's a lot of wood to chop.
We think about the idea of least dirty shirt, and I was listening to our economics editor Michael McKee talking with Adam Posen today from the Bank of England, and he was saying, at least there, when politicians say they're going to do something, when the bank says it's going to do something, they do it, regardless of whether they have to deal with details, in a certain time frame. Do you think they have the most credibility?
The UK, you mean?
Yes.
The UK has a much simpler situation, right? They have their own currency, they have their own central bank, they have their own monetary policy, they have control over their own fiscal policy. So it's a much easier situation for them to manage, and they have a plan. Now you can argue with what they've decided to do. You can argue, is austerity at right now really the right thing to do for fiscal policy at a time when the economy is as weak as it is? And you've seen that the Bank of England has responded with more quantitative easing, even though their inflation rate is pretty high right now. It's way above their inflation target. So you do have some confused policy in the UK. But in a lot of ways, you don't have the same default, same kind of credit issues that you have on the continent.
Got it. Dino, thanks so much. Pleasure spending time with you. Dino Kos from Hamiltonian Associates.